Bosh, how's it going everybody? My name's TradeX, this is my trading den, and today we're going to talk about the myth, the legend that is higher time frame directional bias and draws and liquidity. In fact, in this episode we're going to go one step further. We're going to talk about how to trade with higher time frame directional bias on the lower time frames. It's the most common question I get asked in my DMs, so this is going to be a fully comprehensive video covering that topic. If you find value, please do consider smashing the like and subscribe, but let's get the video intro rolling and then we'll jump straight into the good stuff. See you on the other side. We are going to cover, firstly, reading the tape on a higher time frame. It's incredibly important to know where price has been and where it's going. Then we're going to look at higher time frame levels, mark those out, and then cross-reference those on a lower time frame, because that's where we're going to be looking to frame entries. Then we want to understand whether we're inside of a premium or discount, because we only long in discounts and we only short in premiums. And then finally, we are going to look at lower time frames and whether we have an entry to take around those higher time frame levels. Okay. Let's jump straight into my charting screen so everybody's familiar with how I utilize my trade setup. And today we're just going to cover my execution windows. Okay, I do have a new weekly opening gap chart which you can use for Confluence. I do also have a Dixie window, and I also have SPX and SPY and all sorts. But for picking directional bias and draws and liquidity, they aren't needed. So we're just going to focus on this screen today, and it's a completely blank chart. So we're going to do this together. This is what I do absolutely every day. I sit down on my chart, and guys, I suggest you clean your charts every day, and this will help you keep your mind fresh and not get lost in where you are with price action. We're going to start on this top left, and top left is monthly, weekly, daily. Top right is my hourly chart. That's the only hourly time frame I use. And then this lower time frame is 15 down to 1. This is my entry window. So this is what I utilize to frame entries long or short. Okay, so this is where I look for entry techniques, 2022 models and so forth. What we're going to do is start on the higher time frame. So here we are on the monthly, and this is where we want to start marking out key levels. Why? Because we want to understand where price has been and where it's going. As we know, time is fractal, so what we can see on a lower time frame is exactly the same as we can anticipate to be seen on a higher time frame, okay, in terms of how price respects certain levels and certain PD arrays. Now, what do we have here on the monthly? Well, we have an order block. What I'd like to do is mark out 50% of the monthly order block. Why? Because monthly, or any order block in that fact, is CE is a level where you would want to see price respect if you were looking for prices to continue higher, okay? If it starts dipping below 50%, this is when price starts to show weakness. A monthly OB that is being respected, let me just sort out those caps, is an indication that price is wanting to move higher, because wicks are doing the damage but bodies are telling the story. And where is the majority of the volume? The majority of the volume is above equilibrium of this order block, which is indicating bullishness. I'd also like to mark out this order block that we have here and mark out 50% again for the exact same principles, right? We're looking to see how price respects these monthly order blocks, because all of this is indicating that price is bullish. Okay, so on the monthly, we have two monthly order blocks which are being respected. Price has run down to equilibrium and price is expanding higher. Now we can jump down onto the weekly. Now on the weekly, we can start looking at dealing ranges. And if we are an intraday trader, which I imagine the majority of us are, then we can look at this dealing range, because this is the dealing range that we are currently working inside. And the reason why I'm choosing this dealing range is because this low was taken. This forms the dealing range low, and when this high was taken, this pivot high, this became the dealing range high. So this is the current dealing range we are working within as intraday traders. Sure, if you're a positional trader or a long-term swing trader, you might want to look at this entire range and see where we sit. And as you can see, price is currently running up into 62% of this leg. So it would be worth having an OT high marked on this chart just for reference for the weeks ahead as price runs up into dealing range. But in terms of the dealing range that we've been working inside, this is the one which I'm interested in. And so I'm looking inside of here, what has price been doing? Well, again, price ran down into this order block and expanded higher. Came back into this propulsion block, expanded higher. Price came back into this order block and is moving higher. What is all of this indicating? This is showing that order flow is bullish. Okay, this is bullish order flow. So now we have a very good idea reading the tape on a higher time frame of where price is likely to be drawing to. Okay, we're looking at this drawing rate, this dealing range. We've seen high time frame order blocks be respected, and we've seen price come down below fair value to allow market makers to accumulate long positions, and we've seen various order blocks respected, indicating bullish order flow. At this point, one concept of ICTs, which is if price is above 50% of a premium range, we can anticipate price to go and draw for inefficiencies and buy side liquidity versus going to tackle sell side liquidity. So again, that just plays into another confluence for why we would anticipate price to drive higher. Okay, now we can start dialing in our levels, getting closer to where we specifically are. So this is where I'd want to mark out the high of this order block. Why? Because if price is bullish and it is looking to expand aggressively, it's going to respect the most sensitive part of an order block, the high of this candle. And as you can see, price has respected the high of this order block for moving higher. So that's going to cover the monthly and the weekly. We have now framed our sentiment by reading the tape, looking back through the IPTA range to show that price is bullish and it is looking to expand higher. Now we can jump down to the daily and really start fine tuning this. So now, firstly, we're looking at higher time frame levels. These are the levels where we are looking for price to frame an entry on a lower time frame. We have the high of this fair value gap and the low of this fair value gap, this BISI, buy side and balance, sell side efficiency, before expanding higher. Why am I looking at this level? Because this is the next step in draws and liquidity and daily bias. I have to be in a discount to go long or in a premium to go short. Okay, so if I'm looking at this range here, I have to wait for price to get down into a discount before I can look to go long. Right, this is really important, guys. It is like, if this doesn't transpire, there is no trade for me. It's simple, right? There is no trade. So people who are getting in and getting frustrated is because they're longing in a premium or shorting a discount, even though they might even have the right directional bias and price ultimately goes in the right direction later in the day. It is fundamental that price has to be inside of a discount or a short-term discount if you're looking to drive price higher. So what do we have here? What is equilibrium of this range? And we are now currently on the daily. Equilibrium of this range hovers around this fair value gap low, this BISI low. So where do you think I would be looking for price to respect if I'm anticipating price to drive higher? Well, a fill of this BISI on the higher time frame. Okay, so now I'm looking at this level as an area where I would be looking to go long. And if price does not get down here, guess what? There is no trade. ICT talks about this all the time. If there is no set confluences or stacking of confluences or clear directional bias, then there is no trade. It's very simple. Firstly, we have to have that higher time frame price tape reading to have market sentiment, to understand where price is likely to be drawing to. Then we have to have the higher time frame levels, and we're looking for lower time frame entries around those levels. Thirdly, we're looking for price to be in a discount if we are going long. Well, if price gets down to this level, have we not ticked three of those boxes? We have ticked the tape, we have ticked the high time frame levels, and we have ticked price being inside of a discount. What would we be looking at as a potential target? Well, we would be looking at this low, right? Why am I looking at this specific low? What is that a low of? It is the low of a daily bearish order block. Why am I taking this low? Because this is low hanging fruit, and it would also be a fill of this SIBI. So this is where I'll be anticipating to look for price to draw up into, okay, as it expands higher for all of those reasons I've previously mentioned. All right, so this is going to be the daily covered. Now we can look at hourly to see how price respect those levels. What I'm looking at is this specific day and this specific trade entry that we took inside of Red Pill. This is what we're going to be focusing on. So it's replayed back on the hourly, but it's not replayed back on the daily. Okay, we're looking at this specific candle here when it ran down to this level, and this is the trade. This is what we're going to look at the hourly, and then we're going to look at the lower time frame as an entry at this level. Okay, let's have a look at the hourly. This is that piece of price action. So we can take this low to this high. What did I mention previously? We cannot go long unless price is in a discount, right? So when we're talking about draws and liquidity and daily bias, draws and liquidity and daily bias, our daily bias is bullish, but our draw and liquidity short term is actually bearish until we get down into a level where we can expect price to go long, okay? So you often hear it. You can make money even when the directional bias isn't right. So, you know, if you want to wait to trade with directional bias, this is what you'd be doing. You'd be waiting for price to get to a level where you could go long. However, if you're super aggressive and you like trading every single swing, you could trade this short down to this level, which is going anti to the daily bias, right? But for the premise of this, we're going to wait for price to get down to a level where we can go to long to trade with the day's directional bias, okay? Because we're waiting for price to come down into a discount to meet a higher time frame level after reading the tape for price to expand higher to go and tackle buy side inefficiencies, because we are in the upper 50% of a premium range and we're looking for price to run into buy side and high time frame inefficiencies versus price running down to take sell side, right? Make sense so far? Cool. So this is that daily fair value gap low. What is this candle here? All right. This is a high inside of an inefficiency in price. This BISI on the 1 hour, right? So what I'm going to do is mark out this BISI and I'll be looking for price to come down to this 1 hour fair value gap to look to take an entry long. Now, why could I look at this specific level? Again, this is where experience and knowledge of ICT concepts. And if you've not watched ICT series 1,000 times, then you're doing yourself a disservice. I'm here to help you support and help you dial in and support everything that you're learning, but you have to do your own research and you have to do your own studying. Otherwise, if you're just going to try Netflix and chill, you're never going to get this. But this is something which ICT talks about, and an old high inside of an inefficiency can be used as classic support and resistance. I would mark off as an old high, right? This is the range we're looking at. We're looking for price to come back down to this higher time frame level inside of a discount, which is fair value. Anything below 50% is considered fair value. And this old high inside of this inefficiency in price coming down to rebalance this inefficiency before price expands higher. This is forming directional bias and draws on liquidity. Wait for price to get down into this level to see how price respects it on a lower time frame. Okay, so let's jump down onto a 15 down to 1 and analyze how we could use this as an entry to go long. On a lower time frame, and again the same premise applies. So now I've replayed this chart to this specific time when we were at this low of this daily fair value gap, and we are at this high inside of this SIBI, inside of a discount of this range, expecting price to move higher. Okay, so you can see that this dotted line is that line which is from the higher time frame, and we've also got this old high inside of this inefficiency in price. Guys, this is where we stop and go, okay, now we can look for an entry long, okay? Because we have gone through the steps in order to look for an entry, okay? Now, this is where you start looking for your 2022 models. This is where you start looking for your unicorns, okay? This is where you get your most aggressive moves, because you're now entering with the market makers. And I always say in Red Pill, if you had 5 million to spend, would you put it in here? If the answer is, I'm not sure, then you just don't trade. If you go, yes, because we have this, then you enter the trade, right? And then you have confidence to let that trade breathe. You're not trying to trade these little micro 5-handle trades, which is just novice, right? Novice. If you see what we normally trade, 20 handles is average. We're down here at these levels, okay? We have that high, we have that low of this higher time frame. We're expecting price to draw higher to come and tackle inefficiencies, imbalances in price. Now we're going to press play and we can start looking for entries. Now, what have we seen here? Okay, well, price has come down and pinged that high. Now this has come down and swept this sell side. What do you think we have forming here? Okay, so let's play this forward. Now we have the market structure shift. So now we have a sweep on sell side. Now we have the market structure shift. Just a market structure shift. Let's press play. What do we have just below it that's been left behind? Fair value gap. Would that not be a good entry to go long? Would that not be a low risk, high probable entry to go long out of this fair value gap? Right? So let's see what happens. Keep pressing play. Price moves higher, doesn't quite fill it. You could take an aggressive entry here and hold, which is actually what we did inside of Red Pill. But you could hold it. You're anticipating that this is still left open, right? We're anticipating this is still left open. What they have done here is engineered liquidity, right? So price has moved higher. This is now the inducements. This is trapping people into believing price is going to move lower. So people are now trying to short this as we've seen this sell off. It's painting the picture that price is super bearish, but we're actually looking for longs now. Price is coming down. What we're looking for it to do, sweep the engineered liquidity run down into this fair value gap. That's our entry. Stop goes below the low. Okay, still waiting, still waiting, still waiting. If you're still holding, you'd just be holding, obviously. Stop still below the low. Price expands higher. Now, bang. Entry inside of this fair value gap, right? This fair value gap. That is, guys, your 2022 model, right? Using what we've just discussed, an entry model going from a higher time frame down to lower time frame. So guys, now if you want to go to the advanced level, you can start looking at applying entry techniques. Now, if you've not seen my entry techniques volume, which I released on Twitter and also inside Red Pill, then I will put it in the show notes below, okay? It's a full PDF of all of my entry techniques that I utilize in conjunction with everything that we've just talked about today. And this specific entry was actually a London close reversal. So we had a big sell-off during New York and then down into the London close. This also framed another confluence as we could go long. We could also tie this in with new weekly opening gap levels, RTH levels. We could look at how Dixie's interacting with it. There's a whole host of other confluences we could layer on top of this as to why we would take a trade. But this is the most fundamental way of forming directional bias and draws and liquidity. So guys, if you are struggling with draws and liquidity, let's clean our chart, start every day going back and looking at the monthly, weekly, daily levels, marking out those key levels. We're then waiting for a higher time frame discount or premium to be reached, and we want to be looking at lower time frame entries around higher time frame reference points using the PD array matrix. Now, draws and liquidity is very, very simple. Essentially, looking at pools of liquidity above and below old highs or inefficiencies and imbalances in price. When you look at draws and liquidity, now you can start dialing in on a higher time frame. Okay, so I'm entering in here. Where would I be looking to take my positions off? Well, first and foremost, you'd be looking at this range, and you'll be looking at what is inside of a premium where draw and drive price to. Well, we have this pivot high that we had up here. It's not relative equal high, but it is a pivot high. And why would I be using that as a low-hanging fruit? The first thing it will be targeting, or the low-hanging fruits, equilibrium of a range. Then you can look at the buy-side liquidity pools inside of a premium. Then you can look at a breaker block and go through your PDRA matrix. What do we have up here on the hourly? Well, we had an order block, okay? What did price respect before retracing from? The bearish order block. Okay, but above that, what do we have? More buy-side liquidity. Okay, what did we talk about when price is in the upper 50% of a premium range? We're anticipating it to go and drive and take the pools of liquidity. I'm not saying we're going to get through this because this is now incredibly punchy, and we're now looking and heading towards the quarterly shift. So I'm anticipating, these highs to be contested. This is going to be very, very tough to get through into next week. But that being said, we'll be looking for areas to go short up here, all right, below this low, okay? Now, that's going to be it for today, guys. I hope you found that valuable. If you have any comments, feel free to leave them in the comments below. And as always, do consider smashing like and subscribe. Until next time, trade safe and trade smart. Peace!